I've just come over to MT5 again, and particularly the euro dollar, because there's some really nice VPA lessons on the charts. And what I should have done is actually taken a quick screenshot of the 3-minute chart, because while David was speaking, the volume point of control, which is this yellow line here, was actually down here, and was the point at which we started this really nice move higher. Now the timestamp on MT5, let's have a look here. Hold on a second. Is what is it? It shows as 8:51. You have to take 2 hours. For my particular version of MT5, you take 2 hours off that, so it's 8:54, so it was 6:54. Not quite the European Open, but it was a nice sort of start of a breakaway trade. But if we go up to the 5-minute chart, you'll see the volume point of control is still, that's moved. Let's go back to the 3-minute chart. Never mind, my fault. I should have kept the I should have taken a quick screenshot, because the volume point of control is dynamic. It will move as areas of congestion build, as we can see here now in the price action that we're seeing. It was down here at this point. That area of congestion is now wider, deeper than that, so the VPOC then moves up or it moves down. And the advantage of the volume point of control is it has a number of advantages. First of all, it marks on the chart what we call the fulcrum of the chart. In market profile parlance, it's the value area. It's where a market is, traders are happy to transact. They will, there's buying and there's selling, but it is contained. It is contained within a range. Sometimes it's a narrow range. Sometimes it can be quite a wide range. But essentially, it is building an area of congestion. After a period of time, for whatever reason, it could be a piece of fundamental news, it could be a change in the, a new session, then the price will start to break away. And as we can see here, after this this congestion, which has moved from here to here, now it looks like it is going back higher. If we take the original move, which was down here, we call that the start of this primary trend. And those of you on the program will know we go into great detail on not only just Wyckoff's laws, but also on primary and secondary trends. Now, a secondary trend is a pullback, a correction, and what we need to know as traders is whether that primary or secondary trend is actually just that, or is it going to be a reversal? And the reason I like this one is because first of all, we had this nice breakaway, confirmation of Wyckoff's second law. In other words, we've had this congestion phase. We can see the congestion phase. It's just, it's just oscillating around. We've got this very strong platform of support here at 72.23. You can see the number of times it's actually bounced off there, but it's never really broken away strongly. And the trend monitor, this is what happens. It just flips in and out of the colors. We did get a bit of a bright blue here, but it didn't go very far. Came back to the volume point of control, which was at this point here. But then we do get the break, and we do get the break. We can see the break. First of all, the trend dots go to the bottom of the candles. They are very, very close to the price action. They may be red, they may be neutral, or they may be blue, as they are here. But what we want to see is this rise in volume. Now, this is the tick indicator and the tick volumes indicator, and what it has this median line here. Now, at the time you think, well, it's below average line, but you have to take account of the fact that this is, it's still in the Asia Pacific session. Europe hasn't really come on board full time, and certainly this is with London, where we have this huge inrush of volume of participation of activity. But what we want to see is we want to see rising prices, and we want to see the volume rising nicely along with it, and it carries on. And if we call this the start of the primary trend, then we get the pullback, and we have these candles here. First of all, we have this candle here, which on reasonable volume. Now you could say, well, you know, that's got a lot of buying underneath there, but that is actually what you could forget what's happened here. You take that, if you imagine that just stopping, let me just increase that here, right? If you're stopping at that point here, you could say, well, yeah, there's buying under here, the trend dot is under there, reasonable volume, but because it's at the top of this move here, you could say, well, you know, a hanging man candle. So you look at that and think, just beware of that configuration of candle with the volume underneath it. Then you wait and see what happens next. You have a down candle, look at the volume, not a lot of volume underneath it, and you think, fine, okay, then well, that's kind of confirmed that one, because if that you know, if that was going to move lower, then you know, there would be a lot more volume under that. But it's the next two candles which are really interesting. There's a lot of volume underneath it, but they're very narrow spread. If those two signals were in agreement, that candle should be much, much deeper. It isn't. They're very constrained, very compressed. Now that tells you there is price support coming in. It's an anomaly. What's also interesting, it's obviously on a strong support line. We know it's a strong support line because on the MetaQuotes version of the support and resistance indicator, where you have a solid line, it is stronger than a hatched line, and we can see here. Then, in fact, we have momentum coming into this pair. We have a volatility candle triggered. The price is outside of the average true range. There's not a huge amount of volume underneath it. I do accept that, but it is volatility, and what that tells you is that the likelihood is the price will then retreat to within the spread of the candle. The momentum carries through a little bit on the next candle. There's volume coming in there, but the spread of the candle is quite narrow, and then it goes back into the spread of the candle, as you would expect. And we're kind of moving sideways, and now we have the VPOC. Now, that's just one chart. We're looking at the price action and the volume. Now let's put that into context, into multiple time frames, and also looking back as to maybe looking at using the Renko chart for using it as an entry once you get this clean breakaway, as we saw on the 3-minute chart from the volume point of control. And this is where you use a non-time-based chart, such as the Renko, in conjunction with the time-based chart, and you wait until you do get this this matching of the colors on the trend dots away out of the congestion phase and the trend monitor as well. You are going to get phases where you will get tiny little sort of, if you like, micro trends. They may be tradable, they may not be tradable. Euro dollar is probably the pair where micro trends, small trends, pullbacks, corrections are possibly likely. You can certainly think of taking a trade there, simply because the spread on the pair are so competitive these days. It is the most competitive pair in the forex market. That's a decision only you can take, and it really depends on your risk profile, your comfort, how comfortable you feel taking counter trend moves, or do you want to wait for a more distinctive move, as we can see here, as we said, on the break that we saw in the time chart. So you would wait until all that, was cleared. As you can see here, there's the congestion over there, and this is the bit of the trend that we're talking about here. That's fine. So you're in there, but you've stayed within that trend. We've looked at the 3-minute chart, the price action and volume profile of this piece of price action on the time chart. What the Renko chart does, it takes away all that noise. It will just hold the move until it reaches a point significant point of support and resistance, and we've had one significant point of resistance here at 74.46. So this is where we go to a slower time frame, and here I've got the 10-minute chart. I tend to use on these faster time frames. I have the 3-minute, I have the Renko, the 3-minute, and the 10-minute, and I look at the hour for some context, and I also have the daily as well, just to glance over and see whether we're in a congestion phase on the daily, or we're in some kind of trend on the daily. And clearly with euro dollar, we are in a trend, and quite a strong trend, because the dollar has been selling off so heavily. So why did this stop at the place that it stopped? And the reason it has paused is this level here. This chart, I just have our Camarilla indicator, because levels have hierarchy, and by that I mean, if you use Fibonacci, you will know what I mean, because there are certain Fibonacci levels which are considered more significant than others. So it's a hierarchy. With Camarilla, the fourth level, although our indicator takes it to 6, the fourth level is an important level, in as much that it is it's like a bit of a magnetic target for price action. But you will often find this is where price will pause. It will sometimes reverse, but it will, and if it doesn't reverse, it will certainly congest. Sometimes it breaks through and then comes back to retest that level. And with the indicator, this is on the 10-minute chart. The levels are updated every 24 hours, up to but not including the hourly chart. So I know the R4, as you see here, it's approached it once, it's tested it a second time, and now it's on a third approach. So I know if I had decided to take that move away from the breakaway, I know what to expect. With volume price analysis, or with the indicators, what we have tried to do is to give traders the insight of what to expect next. If you know what is likely to happen next, you can then take a decision. As David said, if you see a volatility trigger come into one of a position that you are in, you know what is likely to happen once the volatility is triggered. You will get a snap back into the spread of the candle. You will either get a congestion or you can get a reversal. If you know that what is going to happen, you can take a decision. You might want to sit through it. You might want to close out, but at least you have the choice. You have a certain degree of control over what your decision making should be. You're not being driven by simply emotion, just fear, if you like. Oh, I've got to get out, or I've got to get in. Either a fear of missing out or a fear of a loss. Because what we've done, or what we try to do with volume price, as I said, with volume price analysis and quantum indicators, is to give you a sense of some degree of control. There's not an awful lot we can control in our lives and control in trading. We can certainly control where we can get in, and we can certainly control when we get out. But at least we can manage the emotions that are triggered as we trade. So I know why this is, this has come to a pause on this particular move that I've seen here on the 3-minute chart. Now, the nice thing about it is the VPOC has moved up, and it's at the moment the price action is above it, so it is clearly supportive of the price action. If it's below, then it's acting as more of a resistance. But the really cool thing about the Renko indicator is we've had this pullback, quite a dramatic, we've had volatility in there, we've had a correction, but still the indicator is saying no. If you want to hold on, if the decision is yours, at the moment it's holding, and it looks like it's possibly going to carry on higher. But to carry on higher with with a degree of certainty is it has to get through the R4 and break clear. Now, what might happen is it will go through. The chances are it may retest again. This is what the Renko is telling us it's holding us in for the time being. On the daily chart, let's have a look. Well, we can see here, this is this, as I said, the euro dollar is almost like a mirror of what is happening on the Dixie because of the weighting of the currency in the Dixie index. And we can see here we've had this, for the euro, it's a great move higher on this primary trend, really from the volume point of control at 12.56. And I always have not a moan about the euro. It can be, it can deliver some great moves, and then other days it can be so narrow, it can trade in such a narrow range, it can be very, very frustrating. And we can see here, this is this little the pullback yesterday, really reflecting the fact that the dollar is trying to base at that very strong support weekly support level that I highlighted on the Dixie, but it's now trying to resume the primary trend. We call this the primary trend higher, and it's all going to be down to the Fed. So using non-time based chart, volume price analysis, hopefully our indicators, understanding the significance of the different levels in the different time frames should give you enough to be able to not only to take a trade, but more importantly, going into the market is not actually the most difficult thing. You can see a signal, you can see a candle pattern, you can see whatever criteria used to get in. Getting in is actually the easy part. The difficult part is staying in and maintaining, holding that position, and also having a view of where you think that move is likely to go next. So this is where we move to a slower time frame, and again looking at the levels here. This is the hourly chart. This is this little break that we've looked at on this is the 3 candles that make up the candles that we've seen on the faster time frame. We can see it's actually been in a consolidation phase around the R3. So where would we think logically this is, this pair is likely to be heading to? Well, we have a high here, we have another high here, but logically it's obviously the R4, the 1796. If it gets there, it'd be great if it did. What I've done also is I have put the 2 currencies, individual currencies themselves, taken it from the CSI at the bottom of the chart, and it really does help to you do have a reflection on the lines. You've taken away all the other currencies, and you can just see what is happening with the euro and the US dollar. And we can see here, this is the buying that we've seen. It's really very strong buying in the euro. We can see the downturn in the dollar. We'd go and have a look at the Dixie to see whether that significant level on the weekly chart is going to hold. What it also tells you is, you can see here when David was saying, when the lines are moving together and there's no divergence, what is this reflecting? Well, it's reflecting the congestion phase that we can see in on this chart. Now, this is the hourly chart. If you take one individual candle, let's just say this widespread volatility candle here, if you're a scalper, if you're down on the seconds and the faster time frames, there could possibly have been a trade for you within the spread of the candle. But as I said, we're just looking at the hourly chart for a view of where we think this pair could be heading. Now, what could also happen is the euro will continue rising, as we see here. The dollar may just flatten out, and this may just sort of start to congest here in the center between the R3 and the R4. So we go down to the 10-minute again, and we can see here, in fact, it has actually broken through the R4 on the 10. Now we're going to see whether is that going to be a clean break, or is it going to come back and retest, which it sometimes can do. And where is the next logical target? We've got 779. That's the next target. The euro has actually turned on this time frame. This is what I'm saying, but this is now being driven by the continued weakness in the US dollar. So we've got a bit of an asymmetric drive on this pair. Can it carry on? Sure, for sure it can, because on the hourly we've got the pairs nicely diverging. So it's, you know, it's looking at the multiple time frames, looking at what you see on the candles, and in fact on the 3 minutes it's now posted a volatility candle. And as I said, what can we expect? Well, you know, we can expect a retrace within the candle, maybe a congestion, maybe a reversal, or it will, you know, it can also continue higher, but at least we know what to expect. And the Renko, again, that is helping to hold us in. Injections of momentum, injections of volatility, you know, they're great because they help to drive the price higher. If you're not in the thing to avoid is, if as a trader, is if you see this and you see this injection of momentum, and so I know most traders, you know, won't have an indicator such as this, which measures that tells you that the price action is outside of the average true range. A lot of traders will say, oh great, I've waited, I'm going to jump in, and then suddenly it goes against them, which often happens. And you know, this is what we're seeing at the moment. But it's anticipation, it's expectation, it's knowing what is going to, you know, we know what is going to happen because the price action and the volume tells us, and also the indicators help to support that as well. So a really interesting look at euro dollar, as I said, of the VPA lessons, how the indicators can help you with a trade entry, trade maintenance, and also, you know, potential exits as well. Depending, that the exits will depend on how, you know, what is your what we call in our program your trading persona.